Ever catch yourself, like, daydreaming at your desk? Picturing yourself finally having the freedom to say peace out to a job that's just not doing it for you anymore.
Oh, absolutely. Or even just like knowing you could chase a totally different dream if you wanted to, having that security.
Exactly. That's the beauty of this whole work optional thing, right?
Yeah.
It's not always about never working again, but more about that sweet spot where you have the control you decide if, when, and how work fits into your life. And that, my friend, is what we're diving deep into today.
We've got a mountain of research to unpack, all about figuring out how much is actually enough to make that work optional life a reality.
Because let's be real, it's a question we've all probably pondered at some point, right?
Oh, for sure. And luckily, there are some pretty solid ways to approach it. It all starts with understanding this idea of a minimum investment threshold.
Okay, I already know what you're thinking, cue the scary math music. But don't worry, we're not just going to throw a formula at you and call it a day.
Definitely not. We're going to break it down, get into the nitty-gritty of how it works, and most importantly, figure out what it actually means for you.
Because at the end of the day, it's all about giving you the tools to take control of your own financial future, right?
100%. So, ready to dive in?
Let's do it. Let's talk about this formula. It's called the minimum investment threshold formula. And it's basically the financial point where, theoretically, your investments are earning enough to cover your living expenses.
Exactly. It's like finding that magical balance point. The actual formula is pretty simple. Your investment threshold equals 1 divided by the historical return of your investments, and then you multiply that whole thing by your gross annual income.
All right, stay with me here. Imagine a seesaw, okay? On one side, you've got the income from your job, and on the other side, it's all the money your investments are bringing in. This formula is like figuring out how much weight needs to be on that investment side, so that if you hopped off the job side...
It wouldn't come crashing down.
Precisely.
But, and this is a big but, there are some built-in assumptions here. It assumes you're already living within your means, you're not drowning in debt, and ideally, you're saving a good chunk of your income. Think at least 20%.
It's not about just barely scraping by. It's about having that cushion, that freedom to maintain your lifestyle, even if you decide to work less or chase a different dream. Which is why we're talking about using your gross income in these calculations, not just your expenses.
Exactly. It's about the bigger picture.
Okay, so let's bring this formula to life, shall we? Let's say you're currently making a cool $100,000 a year, and you're feeling pretty bold, so you're all in on the stock market. Now, historically speaking, the stock market has returned around 10% annually. So where does that put us on the path to work optional?
Right, let's crunch some numbers. We take that 10% return, which is 0.10 as a decimal, and we plug it into our formula. 1 divided by 0.10 equals 10. Then we multiply that by your $100,000 income, and boom, we get a $1 million investment threshold.
So theoretically, a cool $1 million in the market, and you could hypothetically kiss that daily grind goodbye.
That's the general idea.
That's pretty motivating if you ask me.
Hey.
And you know what? We actually found a perfect example of this in our research. Imagine a 38-year-old stuck in a soul-crushing government job. Their real passion is writing.
Ooh, I feel that.
Right. But they've been diligently investing, and they hit that $1 million mark. Now they could realistically ditch the day job, pursue their writing dreams, and still be financially secure.
See, that's what I'm talking about. That's the power of this stuff.
Now, let's be real. Not everyone's comfortable going all in on stocks, right?
Yeah.
What if you're a little more cautious, maybe looking for a smoother ride as you get closer to those retirement years?
Totally. Diversification is key.
Exactly. So let's say you're 45. You're pulling in a hefty $300,000 a year in the always unpredictable world of tech.
Oh, I know a few people like that.
Right. You're ready for a change, but you'd prefer a more balanced approach, maybe a classic 60% stocks, 40% bonds portfolio. How does that change our calculation?
Well, a balanced portfolio like that is usually a good bet if you're looking to smooth out those market swings. Historically, we're looking at returns around 8% annually for a 60-40 mix. So let's plug that in. 1 divided by 0.08 gives us 12.5. Multiply that by the $300,000 income, and we're looking at a target of $3.75 million.
Okay, that's a pretty significant jump from our all-stock scenario.
Yeah.
But here's the interesting part. What if this person already had, say, $2.5 million saved up? And they're diligently investing, staying the course.
Well, if they keep that up, assuming that steady 8% return, they could realistically hit that $3.75 million target in under 4 years. It just goes to show you how powerful consistency can be, even if you're not taking on a ton of risk.
It's all about playing the long game.
Exactly.
Okay, so we've talked stocks, we've talked bonds, but what about those folks who prefer something a little more, tangible, something you could actually see and touch. Let's talk real estate.
Ah, yes. Bricks and mortar. Nothing quite like it for some people. Now, our research suggests using a 4% historical return for real estate, which is definitely more conservative.
A bit more grounded, you could say.
Exactly. So let's say you're earning a respectable $200,000 a year, and you're all about building wealth through property. What would that look like?
Okay, let me give this one a go. So we've got 1 divided by 0.04, which gives us 25. Multiply that by $200,000.
Yeah.
Whoa, we're looking at a $5 million investment threshold.
Yeah, that's a big number.
That's a serious chunk of change, even for someone who's passionate about real estate.
It seems daunting, but here's the thing about real estate. Leverage. You don't necessarily need to have the full amount up front. With a mortgage, you might only need 20% down to get your foot in the door.
You're talking about putting down $1 million to potentially own a property worth much more.
Exactly. Suddenly, it doesn't seem quite as impossible, does it?
And that's the beauty of real estate, right? It can seem out of reach if you're just looking at the sticker price, but that leverage can be a game changer.
It's all about finding the right strategy for you, the one that aligns with your goals and risk tolerance.
Exactly. And that's what I love about this whole minimum investment threshold concept. It's not about getting fixated on one magic number, but more about understanding the possibilities, having a framework for making informed choices.
It's about taking control.
Yes. Because let's be real, hitting this threshold, it's not necessarily about retiring early and jet setting off to a private island.
Although that does sound pretty nice.
Right. But it's about something bigger, isn't it?
It's about freedom. Having the freedom to design a life you actually love. Maybe that means working less. Maybe it means having the guts to walk away from a job that's no longer serving you.
Or even taking a pay cut to pursue something you're truly passionate about, but you were always too scared to make the leap. There was a story in one of our research articles that really resonated with me. This person, they were stuck in a toxic work environment, miserable.
Ugh, the worst.
Right. But they felt trapped by that paycheck. Reaching their investment threshold, it gave them the courage to finally walk away and find something so much better, even if it meant making some lifestyle adjustments.
I love that story. It's such a powerful example of how financial security can translate into the freedom to prioritize your well-being, your mental health. Because it's not just about money, right?
Absolutely not. It's about aligning your financial reality with your life goals, whatever those may be.
100%.
And I think that's a really important point to remember, especially when you consider that reaching these financial goals, even with a solid plan, it takes time. It takes discipline.
It's not always easy.
Not at all. There are going to be ups and downs. The market's going to throw curveballs your way.
Oh, yeah. Buckle up.
It's a marathon, not a sprint.
That's a good way to put it.
But I think that's why it's so crucial to connect with the why behind your financial goals. What is it about reaching this threshold that really lights your fire? What will it allow you to do with your life that you can't do right now?
It's like having that North Star guiding you, especially when things get tough, you can remind yourself why you're doing this.
Exactly. Having that clear vision, that purpose, it could be so powerful.
It's everything. And speaking of big picture thinking, did you come across that Japanese concept of ikigai in your research?
I did. It's about finding that sweet spot, right? Where your passions, your skills, what the world needs, and what you can get paid for all intersect.
Yes. It's like finding your purpose.
Finding your reason for being.
Exactly. And while money isn't the only factor, achieving a certain level of financial freedom can definitely help clear the path, It allows you to explore those passions, your purpose, with more clarity, more intention.
It's wild to think about, right? Like just taking control of our finances, it could be the key to unlocking that kind of self-discovery. But okay, before we get too deep into the existential stuff, let's bring it back down to earth for a sec.
Back to reality.
We've covered a ton of ground today, from the nuts and bolts of this whole minimum investment threshold formula to like the deeper meaning of what it really means to live that work optional life.
It's been quite the journey.
It really has. So as we wrap up this deep dive, what are some key takeaways you want our listeners to walk away with?
Well, I think the biggest thing is to remember that this formula, this investment threshold, it's a guide, a tool. It's not about putting yourself in a box. Your own situation, your risk tolerance, your dreams, those are all going to factor into your own unique path to work optional living.
So it's about taking these concepts and figuring out how they fit into your life, your goals.
Exactly. And don't underestimate the power of consistency, even if you feel like you're not making huge leaps and bounds right now. Small, regular contributions to your investments, they really add up over time. Compound interest, baby.
It's like Einstein said, right? Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it.
Words to live by. And that reminds me, when it comes to investing, time is your best friend.
The earlier, the better.
100%. The sooner you can start, the more time your money has to grow and work its magic.
Now, before we wrap up, I want to circle back to this work optional idea.
Mm?
Does hitting your investment threshold mean you have to quit your job tomorrow?
No way. Not at all. It's all about opening doors, creating choices. Maybe you work less. Maybe you switch to a career that's more fulfilling.
Maybe you finally take that sabbatical you've been dreaming of.
Exactly. The point is you've built that security to design a life that really lights you up.
It's about having the power to choose, not being forced down a certain path.
Couldn't have said it better myself.
And you know what? That ties back so beautifully to that ikigai concept we were talking about. This financial freedom. It can be like the key that unlocks that life of purpose and passion.
Absolutely. And who knows, maybe you'll even inspire others to find their own ikigai along the way. That's a pretty awesome thought.
It really is. Well, on that note, as we wrap up this deep dive, here's a final thought for you to ponder. What does enough look like for you? What would you do with your time if work wasn't a necessity?
Answering those questions can be so powerful because it's all about taking control of your financial future so you can create a life that's full of purpose, passion, and, hey, maybe even a little adventure along the way.
Couldn't agree more. Well, there you have it, folks. We hope this deep dive into the world of work optional living and the minimum investment threshold has left you feeling inspired, informed, and maybe even a little introspective. Remember, financial freedom isn't just about the numbers. It's about the incredible possibilities they can unlock. Thanks for joining us on this journey, and until next time, keep diving deep.